Hey there, fellow investors and traders, and welcome back to our channel where we deep dive into the exciting world of finance. Today, we have some breaking news to share with you that's sending shockwaves through the industry. The SEC is turning up the heat on Binance, the world's leading cryptocurrency exchange. But that's not all. We'll also be uncovering the secrets behind the stock market approaching the golden pocket, a potential game changer for traders and investors. And hold on tight as well, because the options market is showing us something fascinating that's in store for us. Get ready for an eye-opening discussion filled with insights you won't want to miss. Let's jump right in. Well, welcome back everybody to the Daily Show where we talk about markets around the world. Of course, today we're covering stocks, commodities and cryptos, macro data, information in general, and of course, the hottest charts with the key levels. If it's your first time here, welcome to the community. And of course, smash that notification bell, hit the like button and subscribe if you find value in today's video. I'm sure you will. We've got a lot to cover. So first up, it's an expensive product from Apple, but hey, it's a new product. $3,499 is all it will cost you for the Vision Pro headset. And of course, Apple unveiled a whole bunch of things which sent the stock to new all-time highs. We discussed this in our live stream, which we perform here every Monday for the pre-open, and we discussed the idea that what happened around the all-time high would be important. Are we seeing a buy the rumor, sell the fact here on Apple? Well, it's certainly a very interesting level. On top of this, the news kept getting bigger, and this sent crypto, especially Bitcoin, into a bit of a meltdown. Binance is accused of web deception in the US, and the SEC is turning up the heat on Binance. When we see things like this, of course, it creates a huge amount of stir and often leads to an initial sell-off. Will that head and shoulders complete? 24,000 is on the cards here for Bitcoin, and we'll be talking about that a little bit later on in the video. I also want to remind investors and traders and everybody that's joining this channel that we always like to update our forward PE ratios all the time. This helps us understand whether it's a great time to invest or a great time to potentially be sitting there going, well, it's not bad to hold our positions, but maybe it's not the best time to enter in. Now, if you're looking at just forward PE of the total S&P 500, it's currently trading at 18.02. Now, this has actually been upgraded a little bit recently, and you'll notice that it was 18.4, and now it's come back down even though the price has remained relatively stable. This is because some big analysts are actually upgrading the biggest technology stocks. But are we cheap? Not yet. 16.8 or under is when you start getting cheap. And of course, one standard deviation, just when you get around that 14.5, 15 is a beautiful point. Do you often see that? No, but when you do see it, you might know what to do. If you haven't already, jump on over to our Twitter, links in the description down below. We posted here a very interesting chart, and this shows us the S&P 500 change in forward 12-month EPS versus the change in price over the last 10 years. And you can see here that we've seen a little bit of an uptick in the last couple of months of upgrades coming across the board. Most of those upgrades are going towards stocks such as AI stocks, but when they make up a huge percentage of the market, that is helping to boost the current EPS. There are some different countering approaches here, though. Here's an excerpt from, of course, Morgan Stanley's new report, and they said that they believe earnings per share for the S&P 500 are set to drop 16% this year, according to them. And this is a bit of a difference to, of course, what Goldman Sachs are saying, which they anticipate mild growth. At the end of the day, though, when you actually break it down and they talk about, how much they're expecting per S&P 500 kind of, overall position, they're saying 3,900, and last time we checked, 4K was actually Goldman's report by the end of December this year. At this time of recording, of course, we are closing in on 4,300. So basically, Morgan Stanley, Goldman Sachs, and everybody else are still saying that the market should be down further from this point. Are they going to be correct? Well, we'll find out in a few months, I'm sure. We're coming into Q3, which is a very important time for markets. So what about tech flows? Well, here's a great chart that shows how much money has actually gone into these technology stocks recently. No surprises. If you've been watching NVIDIA or anything from really semiconductors in general, they've been absolutely flying over the last couple of months. And we continue to see inflows into specific stocks. And this is a tale of still fairly low breadth, although it did improve on Friday and then lessen off on the Monday trade. So what have we got here? Well, this basically shows us probably a whole bunch of mutual funds being forced to buy in as they sat on the sidelines for quite some time with money. Does that mean it's the best time to buy? Historically, when you get flows like this, there's usually a pullback after it. And I think that's something to keep in mind. And we'll go through a lot of the bullish indicators and the bearish indicators as we approach a very key level. Have we seen turns in the market yet? No. Should we be scared yet? No. But are we seeing a lot of back end signs? Absolutely. And I think as we approach 4,300 on the SPY, we need to keep an open mind to the levels moving forward. Here's a bit of an update on the credit default swaps from the US Treasuries. And you can see here, since the debt ceiling agreement was made, look at that. Look at that heavy drop off. You'd almost say, why was the bonds market even concerned? I think we all knew that they were going to raise the rates. We just didn't know when, or raise the debt ceiling. But we just didn't know when they were going to do it. Obviously, it could have been now, it could have been a month from now when they're all complaining. But overall, look at those credit default swaps absolutely drop off. I've got two bits of information that I thought you might want to see. I did say on this channel, I only like bringing up information that's actually less than 50% or greater than 50% by a lot. So here's a read. It's called the NASDAQ Hindenburg Omen. I don't really look into this too much, but these are all the points that it's happened in the past. And of course, there's some stats for you. The data doesn't really lie. Obviously, when we get reads like this, it often leads into, I would say, a murky next 6 months, which makes some sense when you consider that we are in a pre-election year in these markets. Here's another one called the NASDAQ Titanic Syndrome. It sounds funny. Anyway, when we have a look over here, the next 2 weeks, interesting. We get readings like this. Often the markets were down. Again, statistically, markets are always bullish. They're sitting at about 59 to 68%, depending on the index you're looking at, per day over time. So when you get these kind of reads, 33% only bullish over the next 2 weeks when we see readings like this. And it's not like we have a small subset of data. We have quite a lot of data, and you can see some of the points in the past history to keep in mind, and of course, keep an open mind both ways. What about leverage traders? Well, we talked about how mutual funds are generally basically around 60 cents in every dollar going into the market. Recently, they've had to buy technology stocks. Makes sense. We've seen it in the charts. But what about the leverage guys? Well, the leverage guys remain incredibly leveraged. In fact, they're leveraged the same way they were in August before the turn point in the markets. So that's something to keep in mind. Now, does this mean they have lots of puts everywhere? Well, we'll discuss where the puts are a little later on. But you might notice that if you look at the middle of this month, the middle of June, maximum pain remains at around 410. We're currently trading close to 430 on the SPY. So we actually have room to potentially go down after this initial boost that's pushed us to these extremes. Let's look at some other evidence here. We will be highly anticipating our survey reports coming through later on this week. Look out for the Friday video. Make sure to subscribe for this, because if these survey reports come in how I think they might, I think we're going to see less bears, maybe down to 33, 34% on the bearish side, a lot of neutrals, and we're hoping for bullish. You basically want around 30% plus, and generally around 32, 33 would be exceptionally good for this. Now take a look at the 1 year bullish high. Look at when it happened. Notice what happened to the market. You can go and check it out about a week later. It's not a guarantee, nothing is, but of course, if you stack odds together, it does help you out. Where are we right now? We're coming into the middle of June. You can see here in pre-election years what tends to happen over this period. Usually there's a bit more left in the NASDAQ. There's a little bit more left in the markets. We'll find out, but they're currently still, of course, in an uptrend. So will we continue to get this? But generally that July into August or anywhere around here is where we have what we call the 6 months of kind of sideways action. You can see if we took an aggregate cycle, it grinds higher, but it's very low returns. So basically Q3 in particular, July into August, will be a very interesting time for markets. And as we approach these critical zones, you need to keep that in mind. Now that we know these debt ceiling, federal debt limit things have happened, usually markets will go sideways to down. Of course, it's just the stat, but since the 1990s, that's tended to be how it works over the next kind of 10 to 20 days. Something interesting to keep in mind. Let's now look at some technical indicators as we go through the rest of these charts. We'll look at options very soon. Then we'll look at, of course, all of the things to do with crypto, commodities, and stocks and individuals and rotation. But we'll begin here with the skew, often considered kind of the black swan indicator. Now, when you get a 150, it means put's really expensive. We got a skew crush. Now, we've seen skew crushes before in 2022, and they've marked turning points in markets. Are they by themselves okay? No, but I have said that this is a very important point, and I don't think that is even debatable. We have seen a skew crush, and we're starting to see the turning points in the market towards puts again from the bigger players, and of course calls still from the smaller players. Very interesting switches. I'll show you some of those a little bit later on in the video, but skew has been crushed. PCC, put call ratio, very low, usually a turning point. Let's have a look at another time this year, February the 2nd. Remember what we saw only about a week after that, and then 2 weeks after that, what happened? It's just something to be cautious of. This is another sign that usually, when you're looking at it, these are all the types of things that you start stacking together along with technical analysis. What about the volatility of the volatility, the VVIX? Well, the VVIX showed a greenie on Friday. So this is an interesting point because, of course, when we see TD13s and we see a green market, while a green kind of volatility of volatility while the market actually boosted, fairly rare signal. We've seen TD13s before, and we often do get a little bit of volatility coming through that zone. So it's going to be important to watch these and to, of course, pay attention to it. What about the percentage of stocks above the 200-day moving average? Everyone's yelling out about breadth. Yes, it has improved. Has it broken through? No. So we don't have a breakout yet of breadth in these markets. We do have a nice initial rotation, but not a breakout of breadth. We'll look at it later on today. What about S&P 500 stocks above 20-day moving average? Well, in general, it's been improving, which is good, but still not at an extreme high or an extreme low. Always great to have those on your chart. Here's another one that everyone's discussing, relatively speaking, because it's very important to do so. You've got to start to ask yourself the question, will technology continue to outperform the Russell 2000? It's very likely the Russell is getting close to its base, if not very, very likely to, continuously see consolidation. And one of the reasons is just the extreme amount of long-term puts that are sitting under certain levels. But at the same time, the NASDAQ has run off. That's symptomatic usually of new runs in markets. And we've seen this several times before. But when they run very hard, like they have right now, they go into periods of underperformance. Just look at 2020 and it'll make a lot of sense to you, and certainly a chart worthwhile watching. Here's another one that we need to bring up, which is, of course, Broadcom. This is just one of the semiconductor stocks that went really berserk over the last couple of weeks. And to me, this kind of candle generally tells us that we're in a blow-off. So while I still think that AVGO might drop and then rally up, this could be a multi-month kind of thing. In general, I usually expect the market to have topped in on this stock for the medium term. That's 3 to 6 months, even 9 months away. So AVGO to me is a no dice. However, it's something that I'm looking at along with NVIDIA. And NVIDIA didn't show us as bigger signals. We really wanted to see NVIDIA get crushed. That still hasn't happened. And if it gets crushed, 10, 15% from the top very quickly, that usually shows you you're kind of in the topping range. At this point, we could just be consolidating for one last final push. Some other stocks that have been going around. We discussed this on the Monday stream. This was SoFi. Obviously a risky stock, but like a lot of others, Palantir, SoFi, a lot of the favorites of 2021, some of them have some pretty incredible bases on it. And this is just a stock that I just thought I'd bring up and show you that these bases are there. If you have a look at PLTR, which continues to get a huge amount of calls and squeeze on it, you can see it's a very similar style base and an extreme push. So of course, it's risky, everything like that, but this is definitely in a squeeze at the moment. So it's just one of those stocks that's happening. What about treasuries? People are asking about that a lot as we go through these items. Generally, treasuries will show a positive signal, especially if the market does end up going negative for whatever reason. Maybe we see jobs start to get worse in the next month or 2 months as we enter into Q3. And I would keep this in mind along with everything else, just in terms of the Q3 of this year. This is 2011. You can notice some of the dates here, July into August. A time to be cautious in the markets, at least that's the way I feel about it. Everyone's hating on treasuries. I don't hate treasuries personally. I still think that 100 is an interesting technical. Obviously, these lows would be extremely interesting. And a lot of this comes back to the Federal Reserve as well. And what are they going to do about rates? Are they going to raise it 25 basis points? Are they going to pivot, just keep holding it here for a while and then eventually cut it? Well, those things will matter when it comes to treasuries. If you believe they're going to cut a lot, treasuries could be interesting. We'll move over to Dr. Copper. Looks like it's trying to break out here. So certainly, has it found its base? Was that all we got in terms of the metal cell? Well, we'll keep watching it. Copper is, of course, the doctor of the economy, and we need to know whether it's doing well or poorly. What about central bank inflows? This has been pretty much the greatest bull case of the year, along with upgrades in the AI sector. The second bull case has been the Federal Reserve sneakily, and other central banks around the world sneakily injecting money in. they continue not to drop it as much as you'd like if you were a bear. It's a bit disconcerting if you want to be a seller in these markets because, really it's helping you believe in